After another terrible, horrible, no good, very bad day, where sellers, of course, panicked in response to some tepid data. Yesterday was the ugly PMI. Today was the ADP subpar payroll report. And, of course, in just general overall gloom. How do you protect yourself? Now, I've been warning you to raise cash in anticipation of a pullback. So now that the market is being hammered, what should you be doing as it retreats? Here's an idea. When we started rolling over yesterday, what was the best performer in the market? Why, it was McCormick, the world's leading maker of spices and seasonings, with a stock that managed to rally more than $10 or 6.8%, even on a hideous day. Now, some of that's because the company reported an okay quarter and the stock had pulled back going into the report. But there's another component here that we need to talk about. McCormick didn't rally in spite of yesterday's sell-off. It rallied because of yesterday's sell-off. This is exactly the kind of name that money managers love to pile into when they're worried about an economic slowdown. In other words, McCormick may be the perfect stock for this moment. And thanks to today's market-wide meltdown, you can actually buy this thing a little bit lower than it was yesterday, $2 lower. So what exactly happened with the thing yesterday? And why do I think it may be time to be big in the stock as it goes down? Okay, McCormick is an uber long-time Cramer favorite. You know that. They dominate the spice aisle at your local supermarket, and they've got a big food service business where they supply the same spices and seasonings to restaurants. Plus, in 2017, in a just moment of brilliance, they bought a bunch of condiment brands from Reckitt Benckiser, like French's Mustard, Frank's Red Hot, which is, by the way, beloved by millennials, who I understand seem to put it on a lot of different things. Hey, the president, I think, mentioned it earlier today in a tweet. Hey, even if it's bad out there, people have to eat, right? And take it from my days when I lived in my Fort Fairmont. One of the few ways to make the same cheap, awful food taste different is to add spice. Thanks in part to the mustard and hot sauce trans. You know, I always used to buy, you go buy the chicken livers, like in the little thing. They're the cheapest thing in the supermarket. And you pour stuff on, and it tastes different every night. Thanks in part to that mustard and hot sauce transaction, McCormick's been a terrific long-term outperformer. Stock's up 144% over the past 5 years, roughly triple the gain in the S&P 500 over that same period. I've recommended it again and again and again as the ultimate play on the stay-at-home economy, and I love that Reckitt Benckiser deal, even though the analysts hated it. In fact, in last Friday's game plan, I told you to buy McCormick ahead of the quarter, which turned out to be a pretty prescient call. What made me so confident going into the earnings report? Simple. The stock had backslid substantially over the previous 6 weeks, and that meant the expectations would be easy to beat. That's what you're looking for. You're looking for a stock that's down big and then can bounce. See, J.P. Morgan downgraded McCormick from hold to sell in late August, arguing that the stock was fully valued. Even though McCormick is best of breed, the analysts believed that it had run out of upside. Which brings us to yesterday morning, when the company reported an okay quarter that could easily be described as, frankly, mixed. All right, it certainly wasn't great. While McCormick delivered a 17-cent earnings beat off of a $1.29 basis, their sales came in a little weaker than expected, up 1% year over year. On top of that, management lowered their full-year sales forecast, even as they raised their full-year earnings forecast. Now, initially, Wall Street's reaction was predictably lukewarm. In fact, J.P. Morgan analyst who downgraded McCormick in August, well, he was out there right in the chutes just saying, hey, the stock deserves to be off a bit today, before admitting that, quote, the shares could go either way. But this is why you have to wait to hear the conference call before you make any decisions during an earnings season. And on that call, management painted a much more bullish picture than the headlines. Now, not only did CEO Lawrence Kurzius, who's really one of my favorites, say everything you wanted to hear from a chief executive on a day when the averages were tumbling based on worries about a slowing economy. First, he explained the breadth and reach of our portfolio across segment, geographies, channels, customers, and product offerings. Well, let's just say, wow, balanced portfolio to drive consistency in our performance in a volatile environment, end quote. Translation. McCormick is a classic consumer staple that can keep hitting their forecasts even if the economy falls off a cliff. Now, even though the sales came in weaker than expected, the margins were much better than expected, hence the terrific earnings per share. How they do it? Kurzius points to, and I quote, cost savings led by our Comprehensive Continuous Improvement Program, CCI, and favorable product mix, end quote. In other words, execution, execution, and execution. The soft spot here was food service division, but that was more than offset by strength in McCormick's consumer business, especially, of course, here in the United States. Kurzius calls out a healthy grilling season. Well, that, it was hot this summer, right? Which which drove significant growth in Grill Mates, Stubbs barbecue sauce. I like that, by the way. And Frank's hot sauce. And, yes, French's mustard. Now, we had a debate about French's mustard during the show when we were making the thing. And I've got to tell you, a lot of people felt that the only thing they really liked about it was Clue, where, is it Mr. Mustard? Colonel Mustard in the library with the knife. I think it's better than that. I put it on my soft pretzels when I'm in the box at the Eagles game. Anyway, once again, that record deal is paying off. And I can't stress that enough. Stubbs is growing faster in the broader barbecue category. Frank's hot sauce saw major distribution gains and record high household penetration. And believe me, it's not just because of this, okay? Although this is very personal. They also have frozen chicken wings, seasonings, blends, dry recipe mixes, candlesticks. Just kidding. Across the whole French's portfolio, McCormick saw double-digit consumption growth. I regard it as incredible. As for French's mustard, Billy in Cramer, we're all going to die. It's taking market share thanks to what Curtius describes as a focused marketing support. What does that mean? The company's trying to get more bang for its buck for each dollar they spend on advertising. So when French's created the aptly named French's National Mustard Day, although, by the way, the origin is hotly contested by the National Mustard Day Museum, they were getting the social media going. Curtius says the campaign earned 15 times more media value than our actual investment and created quite a buzz around mustard-flavored ice cream. Bad, with over 1 billion impressions. Then he continues, quote, We're making brand marketing investments like this across our entire portfolio, and their effectiveness was particularly evident in our third quarter consumption and sales growth. In short, McCormick understands how to advertise his products in the new media environment. And by the way, just so you know, this Frank's has this kind of hold on media. You should look at what they say about this stuff. I mean, people just love to talk about it. Millennials, they're nuts. Anyway, finally, in his summation, Curtius lists some of the secular trends that are powering the story. Listen to this, quote, we're aligned with the consumer's continued interest in bolder flavors, demand for convenience, and focus on fresh, natural ingredients. You ever look at the number of ingredients in mustard? There's like none. Yeah, mustard. Anyway, as well as emerging purchase drivers such as greater transparency around the sourcing and quality of food. I've said this before. I'm going to say it again. Millennials want convenience. They'll pay up for natural goods and transparency about where their food comes from. Me, like I said, this is so great on Philly soft pretzels. And I'm going to have 2 of them this weekend when the Eagles play the Jets, and it might be the most exciting thing that happens that afternoon. Now, a good conference call can have a lot of impact. The stock opened yesterday morning up 1.6%. It finished up 6.8%, in part because management told such a good story in the conference call. But while the call was good, it wasn't rally $10 in a single day good. So what else allows McCormick to explode higher? Simple. When the ISM Purchasing Managers reading came out at 10 a.m., the averages plummeted as investors freaked out about a possible recession. But McCormick is exactly the kind of defensive safety stock that people love to buy when the economy goes into slowdown mode. Suddenly, that big earnings beat mattered a heck of a lot more than the small revenue miss. While the quarter had some hair on it, beats me, that was good. It was good enough for McCormick to remain attractive as a safety stock. Don't get me wrong. This thing is less enticing than it was, of course, just two or 3 years ago. It sells now at 27 times earnings. Yields puny, just 1.4%. Stocks run so much. But the bottom line, in an incredibly unpredictable market, a straightforward consumer staple play like McCormick is just what the doctor ordered. As long as the market remains choppy, I think this is the kind of stock that you buy on the way down. Hey, it beats buying candlesticks, right? And where is the candlestick from, Colonel Mustard? The library. And I like it even more after today's pullback. Let's go to Joe in New York. Joe.
Hello, Jim. Thank you for answering my call. I was wondering, I bought Chewy, CHWY,
yeah,
a week ago, and it's dropping like a rock. I thought I was getting a good price. I was wondering if I should add more or sell it or just hold it. I wanted your opinion.
Well, here's the problem with Chewy, okay? It doesn't make any money. And the market switched. And what happened is, once the market became possessed with what I call consistent earnings, What happened is nobody wanted to buy chewy Cocoa Puff, but you still see a lot of UPS men taking it. So, well, let's just say the man's man is giving me a paper towel. In an often brutal market, you need a straightforward consumer staple play. And you know what I think rocks? I think McCormick rocks. All right, there's much more Mad Money ahead, including my exclusive with one of the nation's biggest payroll players. What can paychecks tell us about Friday's job report? I'll ask the CEO. Then Charles Schwab helped usher in the golden age of low-cost online trading. Could it now kill off the model and help build? I'm focusing on the brokerage wars. And all your calls rapid fire tonight's edition of the Lightning Round. Stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.